All right, y'all. In this session, I want to talk about using volume to obtain important levels of support and resistance. Now, we already went over drawing support and resistance by hand, and basically we came up with something like this, where we are going to draw weekly levels, which I have represented by these yellow lines, by going to the weekly time frame. And we can see that, when we see the candles, price finds a sticking point in certain areas, we're going to draw a level of weekly support and resistance. And we can see that price will inevitably retrace back to those exact levels, right? We see it first happen here, and then what do you know? Weeks later, we come back and perfectly test this level as resistance. Then we talked about marking the daily levels of support and resistance, these orange lines here, where we can see where price finds a sticking point on these daily candle closes, and it acts as, it acts as our support, and then our resistance, then our support again, then flips to resistance, flips to resistance, flips to resistance, to support, 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 support. These levels are respected. And then we talked about going down to the 4-hour and looking for areas on the 4-hour, like right here, where we can see that price is respected, right? It comes up, it's our resistance, resistance, resistance again. Then what do you know? Support for all this time. And we talked about doing top-down analysis using our just drawing support and resistance lines by hand. Now, there's another element to this that I want to talk about, and that's using volume to find other areas of support and resistance. Now, this is something that should be used in tandem with hand-drawn support and resistances, moving averages, Fibonacci numbers. I'm going to get into all that in the course. Basically, what we're doing is we're marking out different ways to obtain significant levels, and one of those ways is volume. Now, there's two different types of volume you're going to find in TradingView. The first type of volume is if you come up here to indicators and you just click volume right here. This will put volume that is traded based on the time. So on April 18th, this candle down here, this purple candle, is the amount of volume that was traded. Okay, it's the amount of volume that was traded. Let me see here. Can I? No, I can't. And this will give us levels relative to each other, right? So we can see that there's more volume traded on February 22nd and 23rd than there was on February 24th. There was much more volume traded on April 18th than there was on April 19th. And this is important because when we're watching price break out of a level or break below a level, if we get a lot of volume, that gives credence to the fact that the move will continue. Look, we get a lot of downward volume, we get a continued downtrend. We get a lot of downward volume here, we get a continued downtrend. We get a lot of upward volume here, we get the continued uptrend. We get a lot of upward volume here, we get the continued uptrend. We get a lot of downward volume here, we get the continued downtrend. This is great for helping us trade certain levels. Like if we see that we're coming down below, if we had a support level right here, for example. Hang on, I have to turn this back on. We have a support level right here, right? As we are hitting the support level, we see that we have a lot of sell volume. This is telling us, all right, we're going to come down a little bit more. But there's a way that we can actually obtain support and resistance levels without actually drawing these lines by hand, and that's using volume. There's another volume indicator that we can use to get levels, and that is called the VPVR. The way we're going to get our VPVR, this is what it looks like. The purple represents sell volume, the blue represents buy volume. We're going to go to TradingView, and we are going to type in up here visible range. Make sure to star it, okay, so it becomes one of your favorites. Give that a click. I like to set it like this. I go to the gear. I like to do 200 row size, value area volume 70. Okay, basically what this is giving us our value area low and our value area high. What it does is it will analyze all the price action that's on the screen. All the price action that's on the screen. You will notice a few things about this volume indicator. One, it has the bold area in the middle where the colors are very bright, and then it has the area where the colors are very very dark. What this does is this is giving us our value area low and our value area high. This is basically marking out for us a range that can be traded. Okay, and here, let me get to a new Bitcoin chart. And let me turn on our indicator. This is giving us a range that can be traded, okay, just based on volume, where we can mark out the value area high right here. Whoa. Yeah, the value area high and the value area low. And then this white line in the middle, this is the highest volume that was traded in this entire section, right? In this entire section, this is called the point of control. And what this does for us is it basically outlines a range, and we can use these levels to enter trades. They act as levels of support and resistance. The bottom of the range, right, the value area low, the way we can tell the value area low is because the colors stop becoming bright and they start becoming dark again. This is marking out for us a range based on volume, the amount of Bitcoin that was traded not at a certain time, like with the other volume indicator, but at a certain price. And the higher these candles are, the more volume was traded. The lower these volume candles are, the less volume that was traded. So these are called high volume nodes, where you have a spike in the volume. These are called high volume nodes, and they are significant levels. When we have these low volume nodes, these valleys in here, these are also significant levels. These low volume areas are called low volume nodes, and the high peaks are called the high volume nodes. If we mark out the low and the high and the middle point of the range, you can see that these areas are just respected areas of support and resistance in general. What happens when we come down to the low of this range? We get a bounce. What happens when we come to the high of the range? We get a rejection. What happens when we come to the middle of the range? We can see a lot of times we can enter trades just based on the middle of the range, that point of control. Price comes down, we get a bounce off the point of control. Price comes up, we get a rejection off the value area high. We come down, we get a bounce off the value area low. The reason these areas are respected is because the market remembers that there was a lot of buying and selling happening at these areas and at the point of control. And so when price retraces to these areas, people will look to these areas to fill buy and sell orders. So when price comes up to the value area high, people will look to fill short positions. When we come down to the value area low, people will look to fill long positions. When we come to the point of control, people will look for a reaction off of this area. Now, personally, my favorite way to use this indicator, and I recommend you look into it more, is basically I like to look for these areas of super high volume, and I like to mark them out as support and resistance lines. So we could say right here, the point of control, and then I can see another one right here, another high volume area. I can see another high volume area right down here as well. I can see one right here as well. Basically, I'm just looking for places where there's a spike in volume, a place where there's a significant spike in volume. Now, of course, these spikes are relative, right? So you could say that there's one up here at $62,000, $63,000, because even though there's much less volume being traded up here at $62,000, $63,000 than there is down in this area, it's still a spike in volume compared to, you know, 65K and compared to 62K. There's more trading happening at this level than there is below it and above it. Just like how there's more trading happening here and here than there is in between here. And this is just reflected in the way the price moves. Look, there's very little areas of support and resistance in between these zones. And the reason is because there's very little buying and selling happening here. So when price loses this area, it's very easy for it to fall back down to this area. Now, again, there's a lot of things you can do with this indicator, and basically this is just meant to be an introductory explanation on how to use it. But the way I really like to use it is I like to use it in conjunction with my hand-drawn support and resistance levels. So if we come here and we turn on our volume indicator, I want you guys to notice something that I think is quite significant. Now, I like to use this best on the daily time frame, sometimes even the weekly time frame. You go to the weekly time frame, you know, we can see these areas quite clearly. Go to the daily time frame. It's basically just giving us higher resolution, right? It will deal with the amount of price action that's on the screen. So if I zoom out, you can see that it's dealing now with a lot more, lot more volume, a lot more price action. And we can actually see that most volume, the highest volume that was ever being traded for Bitcoin was up here at 56K. There's more volume traded at 56K than really any price that we can see all the way back down to the $3,000 area. That's very significant area, that 56K level. And what I like to do is, after I draw my levels of support and resistance by hand, I then like to look at this volume indicator and see, okay, what are some other significant areas where there was lots of high volume being traded? And then what I like to do is I like to draw lines of support and resistance where there was a lot of volume to try and find confluence. So if I turn on the object tree here, I can see that we have a high volume node here, we have a high volume node here, we have a high volume node here, high volume node here, high volume node here. These are all high volume areas based on this indicator. We can see that there's a spike in volume at all of these places. Even here at this yellow line, we can see that there's a spike in volume. So basically what I'm doing is I'm looking to see, do I see a confluence between high volume nodes and daily and weekly support and resistances that I drew by hand? Right here, for example, down here at this level, right in this zone between 49.3 and $48.5 thousand, I can see that this is an extremely important support because it's a weekly support level, it's a daily support level, and it's a high volume node. Right up here, okay, at about the and let me come to a different time frame. Right here, right, we can see that this is a very high volume node on the 4-hour time frame. We see a very clear spike. Oops, let me zoom back out. We see a very clear spike in the volume right here in this area, right along this $54,000 level. We see a very clear spike in volume. So we know this is another very serious area of support and resistance. Up here, we see another spike in volume right around the $56.8 thousand level. Okay, right around here. So again, you would say that this area is a very significant level of support and resistance. Right here, we see a high volume spike. It's kind of hard to see. Right around the $58.3 thousand area. I'm sorry, guys. I did something to the chart here. It gets a little bit sloppy. We can see right around this area, there is a spike in the volume. Right here, we can see that clear spike where there's low volume here, a spike here. And so because we have multiple levels of support and resistance based on volume, based on things we drew by our eye, we can say these are very significant levels of support and resistance. Now add into this Fibonacci levels, okay? For example, just as an example, if we take our fib retracement from this swing low to this swing high up here, hang on, let me do this. We can see that we're getting some areas of, hang on, I can't see my swing high. Yeah, there we go. We can see that we're getting some areas of confluence. So if we see that there's a 0.382 and a high volume node and a weekly level of support and resistance, then we can say, okay, this zone right here, we could say is a triple level of resistance. And so it's no wonder that when price comes up here, we get a rejection off of there. Now, this is something that I encourage you to play around with to try and find levels of confluence. You know, obviously I don't keep all these levels on at the same time, but sometimes I'll make a note. Like right here, I made a note. This is the weekly resistance level. It's a high volume node, and it's the 618 retracement. And it's the 618 retracement, I'm pretty sure of, if I take from that swing low down here to this swing high up here, you can see it's the 618 retracement. So this is a very strong level of resistance, and we did get a rejection off of there. Also down here, we can see that if we had taken from this swing low down here, let's say, to this swing high up here, we are getting a bounce off of the 786, which is also a weekly and a daily and a high volume node. So we can say this is an extremely strong area of support. And what we're doing is we're just finding different reasons to mark levels as very significant. And when we come across a significant level, we're going to try and take a trade off of that level using market cipher as our main indicator. So let me show you how we would kind of do that. Right here, we're coming up to a very important level of resistance because it's a Fibonacci level, it's a high volume area, and it's a weekly resistance. Then what we should do is we should zoom in to the lower time frames, and we're waiting. When we mark these levels out, guys, we are waiting for price to get to these levels so that we can look to enter a trade. When we see that price is coming up to these levels, we see something very significant that would make us want to get into a trade right here. First of all, what do we see? We see that we are forming lower highs on the price, okay? Lower highs, meaning that we were unable to form a higher high. We see that we are forming a downward direction on market cipher. We see that we're getting the money flow crossing under on market cipher as well. And so I'll get into this more in the market cipher sessions, but this is showing us we're coming up to a key level of double resistance. We have something known as a swing failure pattern. A swing failure pattern is if we're in an uptrend and we hit a resistance, we lose it, and then we hit the resistance again with a lower high. That's called a swing failure pattern. I'll get into this more later. Swing failure patterns can be done on supports. They can be done as resistances. They're pretty much a sign that we're going in the opposite direction. A swing failure pattern is, again, if we're in an uptrend, we form the higher high at a resistance, reject off the resistance, form a lower high at the same resistance, boom. We get that swing failure pattern, we get lower high, we get momentum coming down, we get the money flow crossover. That's our signal to short that. And, you know, we were waiting for price to get there simply because there was a lot of confluence here. We had hand-drawn support and resistance levels. We had Fibonacci levels. We had high volume nodes. And that's kind of where we're going to look to enter a trade. And of course, there's many different styles of trading, and we're going to go over many different strategies in this course. But I just want to familiarize you guys with the idea, and you're going to get this more throughout the course. I want to familiarize you with the idea of marking out significant levels and then waiting for price to get to those levels. It's very important. We mark them out, we wait for price to get there. When price gets there, we look to enter a trade. All right, guys, that's it for this volume session. I hope you found it helpful, and I will see you guys in the next session.